The circular dealings in the AI space is called an economy. There's really not much to it. Companies buy. In modern capitalism, companies buy and sell goods to each other. It's called a supply chain. We only hire developers in New York City. But yeah, we're pretty much always hiring. We're talking about AMD right now, so let's stick to AMD. Why would I answer questions about biotech right now when we're working on AMD? Think about it. Does that make sense to you? No? Okay, good. Yeah, I got a lot of sleep last night, thankfully. I'm very itchy with the ban button today. Do I need to do held for sale now? AMD with the asset light model. Yeah, we've been bullish on Akira from the start, but we're working on AMD right now. Just checking in real quick with the tape. Good stuff. Might buy some SPRB. Okay, let's check consensus for AMD. Just gonna go to Godel and run the EM command. EM is earnings matrix. Looks like next quarter, Street's expecting 8.7, and the quarter after that 9.1. So slowing, growth slowing. In fact, I could put in all 2026 too. That's nice. Okay. Way back to ancient history for AMD. Just basic vendors, Sagino, software industry, they're data providers. We call them vendors sometimes. And the vendors provide us with data in the form of what's called a API. We take that data and provide it to our users, and we pay the vendor. One big vendor in this space is called FactSet. Another big vendor is called NASDAQ. Hope that answers your question. Big data. We're looking at AMD right now, not giving a basic lecture on software. Okay, so back to the quarterly report. Data center, interesting. Data center wasn't really growing for them. Let's see, non-GAAP gross profit. Margins were actually pretty bad last quarter. I remember did the stock tank on that? Okay, so data center for them, not, it includes CPUs. 308 for China. Okay.
Greetings. Welcome to the AMD conference call. At this time, all participants are in listen-only mode. A question and answer session will follow the formal presentation. If anyone today should require operator assistance during the conference, please press *0 from your telephone keypad. Please note this conference is being recorded. At this time, I'll turn the conference over to Matt Ramsey, Vice President of Financial Strategy and Investor Relations. Thank you, Matt. You may begin.
Thank you, everyone, for joining on such short notice this morning, and welcome to our call to discuss a significant new AI partnership between AMD and OpenAI. By now, you should have had the opportunity to review a copy of our press release and our Form 8K filing discussing this partnership. If you have not had the chance to review these materials, they can be found on the investor page of AMD.com. Participants on today's conference call are Dr. Lisa Su, our Chair and CEO, and Jean Hu, our Executive Vice President, CFO, and Treasurer. This is a live call and will be replayed via webcast on our website. Before we begin, I would like to note that AMD will be reporting our full Q3 financial results on Tuesday, November 4th, after the market close, and remind you that AMD will host our Financial Analyst Day in New York on Tuesday, November 11th, and we look forward to seeing many of you there. Today's discussion will contain forward-looking statements based on current beliefs, assumptions, and speaks only of today, and as such involves risks and uncertainties that could cause actual results to differ materially from our expectations. Please refer to the cautionary statement in our press release for more information on those factors. With that, I will hand the call over to Lisa.
Great. Thank you, Matt, and good morning, and thanks to all of you for joining us on this call. Today marks an important milestone for AMD as we announce a strategic partnership and definitive agreement with OpenAI that places AMD at the center of the global AI infrastructure build-out. AI is the most transformative technology of the last 50 years, and we're in the very early stages of the largest deployment of compute capacity in history. Over the last several years, we have been laser-focused on making AMD the trusted provider for the industry's most demanding AI workloads. And we've done this by delivering an annual cadence of leadership data center GPUs, significantly strengthening our ROCm software stack to enable millions of models to run out of the box on AMD, and expanding our rack-scale solutions capabilities. Our differentiated strategy and strong execution are paying off, with AMD Instinct GPU adoption expanding rapidly. Today, 7 out of the top 10 model builders and AI companies are using Instinct, including large-scale deployments with Microsoft, Meta, Oracle, Tesla, xAI, and others. In addition, there are more than 35 software stack, and open source software like Triton. OpenAI has also been a key contributor to the requirements of the design of our MI450 series GPUs and rack scale solutions. Under this agreement, we are deepening our strategic partnership, making AMD a core strategic compute partner to OpenAI, empowering the world's most ambitious AI build-out to train and serve the next generation of frontier models. To accomplish the objectives of this partnership, AMD and OpenAI will work even closer together on future roadmaps and technologies, spanning hardware, software, networking, and system-level scalability. By choosing AMD Instinct platforms to run their most sophisticated and complex AI workloads, OpenAI is sending a clear signal that AMD GPUs and our open software stack deliver the performance and TCO required for the most demanding at-scale deployments. I want to thank Sam, Greg, and the entire OpenAI engineering team for their collaboration and technical partnership. We are proud to work side by side with one of the most innovative organizations in the world as we advance the future of AI together. This partnership creates a true win-win for both companies, enabling very large-scale AI deployments and advancing the entire AI ecosystem. As part of the agreement to strategically align the interests of both companies, we are issuing OpenAI a performance-based warrant for up to 160 million shares of AMD common stock. Now let me walk you through some of the specifics. The warrant vests in tranches upon gigawatt-scale GPU deployments. The first tranche vests upon deployment of OpenAI's initial 1 gigawatt purchase, and subsequent tranches vest at major deployment milestones, with the last tranche vesting only after the deployment of all 6 gigawatts of GPU compute. Importantly, the vesting of each tranche is also directly tied to increasing AMD stock price milestones, with the final tranche vesting at a price of $600 per share. And to further align our interests, exercise of the warrants are tied to OpenAI achieving key commercial and technical conditions that are important to ensure the success of their AMD Instinct deployments. This unique structure tightly aligns OpenAI and AMD, driving significant revenue and earnings growth for AMD, while allowing OpenAI to accelerate their AI build-out and share directly in the upside of our mutual success. To provide some context on the financial aspects of the agreement, overall, we expect this structure to be highly accretive to our revenue growth and earnings, and create substantial long-term value for AMD and our shareholders. From a revenue standpoint, revenue begins in the second half of 2026 and adds double-digit billions of annual incremental data center AI revenue once it ramps. And it also gives us clear line of sight to achieve our initial goal of tens of billions of dollars of annual data center AI revenue starting in 2027. Overall, we expect it will be highly accretive to AMD's non-GAAP earnings per share immediately from first revenue. We also believe that with the massive scale of this deployment and the strong benefits to the overall AMD AI ecosystem, this partnership will enable additional revenue from existing and new customers deploying at scale and has the potential to generate well over $100 billion in revenue over the next few years. In summary, today represents a major milestone for AMD, OpenAI, and the entire AI ecosystem. Our partnership with OpenAI accelerates our data center AI momentum, deepens our strategic alignment with one of the industry's leading AI companies, and creates substantial long-term financial value for AMD. In addition to the work with OpenAI, we have a significant number of MI450 and Helios engagements underway with other major customers, placing us on a clear trajectory to capture a significant share of the global AI infrastructure build-out. This is a truly exciting time for all of us in the industry and at AMD. The pace of innovation in AI has never been faster, and it demands bold partnerships and collaboration across the entire ecosystem to push the limits of what is possible. Today's announcement is a major inflection point.
Interesting note from Seaport.
Top news alert. U.S. stock snapshot. Wall Street subdued at open after Powell offers no rate clues.
Our recent conversations across the supply chain point to AMD experiencing slowing progress with its AI accelerator business. We think makes it increasingly challenging for them to meet over high expectations this year. Conversations, we show signs that AMD is struggling to grow for many of the customers that announced at its AI event this summer. Market remains challenging with highly demanding customers. Many of the headline customers have only purchased evaluation systems. That are unlikely to convert into volume orders for at least one generation of MI systems. Interesting. Yeah, so in terms of trillion-dollar company being a demarcation line for great or not great, that's not the way I would think about it. I would think about revenues in addition to market cap. IMQ is no revenues. I don't think IMQ could become a trillion-dollar market cap. If it did, I would admit I was wrong. And I don't think the market misprices $1 trillion. Market might mispriced. The biggest mispricing ever maybe was Enron, but even Enron had value. CMGI was a big mispricing. I was short of that. I was a teenager. So Elon was another big mispricing. But these things get pretty stress tested. The market's not stupid. Elon isn't some magician. He's not some con artist that can trick the market into $1 trillion of value misplaced, and $300 billion for SpaceX and $200 billion for XAI, another $30 billion for Neuralink. I mean, it's just insane. People who can't understand that are just brain dead. You got to find a new thing to do with your life. Investing isn't it. Great EP. AMD. This report's from September. AMD did a big event in the summer, which was just 2 months ago, in case you forgot. Elon does not like quantum. 1. 2, he's not starting a quantum company. Sorry, I feel bad for this Korean man. Korea man, this isn't for you either, man. You gotta stop investing. You got lucky. You got very lucky, Korea man. Soon you will pay the price. Pay the price dearly. Still on AMD. Listen, man, just my Twitter account is enough to turn anyone with a brain bearish on quantum, right? Everybody sees my tweets, okay? Everybody follows me. And I've talked to the biggest venture capital firms in the world. They're all bearish on quantum. There's no future there. The biggest entrepreneurs, the biggest VCs, they follow me. They don't follow your account. Some random Korean guy with 50 grand, all in quantum, super leverage. No, they don't follow you. They follow me. Why? Track record. Success. Personal relationships. You are nothing. Never forget that. Okay? Never forget that. Because sometimes I think you forget it. And I'm just here to occasionally remind you, all right? You need a reminder. There's your reminder, okay? Your daily reminder that you're trash. Angu. Gay. It's not ego. It's just facts. I didn't fucking ask for all these people to follow me. Did I? Did I ask them? No, they just did it. Did I sit there and say, please, mister, please follow my Twitter account? Fuck out of here. Got me fucked up. Thinking I give a fuck. Why can't I get past 25 followers? Yeah, I think expectations for AMD are too high. Although, you know, the OpenAI win is, you know, pretty big. I'm still not sure. I think a lot of people are not sure if they believe it. Baker took a bath on that stock, Preston. That was a big L for them. The rare L. But yeah, they own that stock quite a lot higher, and unfortunately, Kodiak or whatever it's called is not such a good pick for them. I don't know why some of my viewers seem to be handicapped. For you guys, go to see Meet Kevin. Go to Amit. Don't watch my shit. This isn't for you, man. I actually think about the companies I'm looking at. All right, so one way to look at this is we're going to look at NVIDIA revenue too. No, No, but I want you to click the X button and go to see Meet Kevin. Go watch him. Don't watch me. Meet Kevin is your guy. Leave me alone. There's one thing you have to know about technology investing is that DCFs aren't really your best tool. And the reason for this is there's basically this sense that in technology, the incremental change matters quite a lot. Go watch Meet Kevin, man. He's got a lot of viewers. He's a good entertainer. Entertainment's great. I love entertainment. Ha ha ha. All right, so the thing about technology investing is you have this is the company's historical revenue growth, let's say. You kind of have to zoom into this box, but in essence, there's different ways things could go. If you get an inflection point that looks like this is kind of faster growth. That's one thing. If you get an inflection point that maybe this looks like this, kind of normalish growth, maybe you get an inflection point that the quarterly results are this. So basically, when the next quarter comes around, and you have to figure out where it's going, you might be surprised sometimes when a tech company reports, just like say if you zoom in on this guy, slightly better than expected earnings and it goes up 25%. Why? Well, if you do the DCF of these lines, right, this company is worth way more than this company. Oops. And it's worth way more than this company. So those little tiny changes in inflection really do matter. Whereas in pharma and stuff like that, I mean, they also matter in pharma, but you know, there's a little bit more predictability. The lines in pharma are a little tighter. Those three lines aren't as big and different. So it's very hard to sort of tell. Of course, you can predict logarithmic growth on DCF. They can predict any series of cash flow. The problem is you don't know which of those three it's going to be. And these tiny little shifts can make huge differences. You can try probabilities of scenarios, but the problem with that is that you're only as good as your probabilities, and you're just basically averaging to the blue line, which, you know, if it's the green line and the next quarter it's an even better green line, that's how you go from a small cap to a large cap like NVIDIA, right? You could never forecast in the DCF what happened to NVIDIA, because it really was this constant question of, well, is it, which one of these threes is it? And then the game resets over here for the next quarter. All these lines disappear, right? All these lines are gone. And the new line for your DCF is, you know, is it green like this, like a hockey stick? Is it blue like this, a smaller hockey stick? Or is it red like this? And the possibility of the zone under here, this zone, is sort of now off the table. So the problem with DCFs is that they don't have Bayesian properties. They cannot update for new information very easily. Only at that quarter do you update the new information. And that's why you see these big changes in tech stocks. It's much less common in biopharma because you know what the more or less you know the bounds. You know the bounds of the possibilities of what's possible with respect to the, you know, kind of bookends of maybe the barriers or the asymptotes of what's possible. You could sort of say, well, the biggest asthma drug ever did this much, and it's good that this launch is going well, but I might have to raise my estimates, but at the end of the day, it's not going to leap off the page like what happened with NVIDIA. You know, now again, you know, never say never, but, you know, when some number really surprises you in tech, you're really talking about a re-rating, whereas when some number surprises you in Biopharma, it typically is less exciting of a re-rate and more of a, a bit of an adjustment that you have to make that improves the value of the company, no doubt, but it doesn't really make you rethink the company completely. And that sort of can happen very easily in tech. All right. Yeah, increasing reporting to 6 months is going to fuck up tech investors for sure. I mean, the smallest hints to changes of growth are really what tech investors are looking at. They're looking for these tiny inflection points that could really presage massive changes like what happened with NVIDIA. So if a product that's why next quarter is really important for AMD. I mean, if they're saying that, they do this call apparently with the sell side before the quiet period starts, and they said that MI3 5.5 is going exceedingly well. 5.5 is going exceedingly well. I don't think they'd say that if it wasn't happening, but at the same time, I'll do some channel checks with my AI guys, but I don't get the vibe that anybody wants AMD chips. It's starting to get cold in here. So again, I'll do a DCF, but it's not really going to be a fantastic system here. I'm going to look at some patents for AMD as well. I'm going to look into the roadmap. I think that one philosophical perspective on AMD is NVIDIA kind of is going to need a counterweight, and in some ways it's probably going to be Avago more than it's going to be AMD, because Avago is making the accelerator, and the accelerator is a little more check. The accelerator is a little bit more exciting for the AI companies, because the accelerator is really custom built ASIC for TPUs, for example, for the use case. Making a GPU to compete with NVIDIA, I'd almost rather make the accelerator, and that's why Avago's got a big market cap. I don't think AMD is winning any inference race. Hell no. But we can look at semi analysis. See what they think. Apparently something coming soon from semi analysis, some big thing. last time they talked about AMD in here. There we go. For the past 6 months, AMD has been in wartime stance. They've been working hard and working smart towards their goal of being competitive with NVIDIA. At its Advancing AI event, AMD launched the 350X, 355X, which could be competitive to B200 for inference of small to medium LLMs on performance per TCO basis. Notwithstanding the reality distortion field projected by AMD, MI355X is not a rack scale product. It's not competitive with B200 at frontier model inference or training. Little reality distortion field. I don't know, Anna. That's a tough one. MI400 will be the true rack scale solution that could be competitive in the second half of next year. That's going to be against the Vera. Or Rubin, I should say. The Rubin R200. We already did V200, the Volta. Okay. Not real UA link, okay. You guys talking about some quantum prices dropping? Ain't it a shame? Oracle.